And so joining me now is our resident expert, Michael Reinking, Senior Market Strategist at the NYSE. Michael, always an honor when you can join us here live in studio, especially around the market open. And what a market open today. What's driving this action?
So I mean, as you pointed out, we've been in a very, very volatile market. If you look at the S&P 500, it's rallied almost 15% off of the lows that we hit earlier this month. And coming into today, we were only within 1% of being flat for April, so that was a pretty unprecedented amount of volatility. This morning, we're having, there's a couple of different factors that are driving the volatility. We've had economic data that's kind of come in on the disappointing side of things, ADP jobs report, kind of with missed estimates. We also had a negative GDP print. There's a lot of moving pieces kind of under the surface there, but that is going to definitely grab, kind of the kind of some headline attention, seeing our first negative GDP print, kind of in a long period of time. And then we continue to be in earnings season. I would say kind of the reports that we got overnight and this morning, not quite as good as what we were hearing kind of last week, right? And kind of within the tech sector has been a standout on the positive side. We had a negative pre-announcement from Supermicro overnight, which is really hitting kind of that AI complex.
Yeah, and it seems like a lot of companies, especially just this week, pulling guidance due to the tariff uncertainty.
Yeah, and so in terms of the companies that we're seeing pulling guidance, they're really consumer-centric and consumer-facing kind of companies, and the kind of the auto companies as well, which kind of are caught right in the midst of the tariff uncertainty. More broadly, right, what we've seen companies doing is kind of tweaking their guidance, providing kind of some dual track guidance in terms of kind of a so-called for Wall Street terms bull case, bear case.
Yep.
In terms of what tariffs might do. They're starting to kind of outline the impacts of tariffs, kind of on their bottom line, right, and starting to tell investors how they're trying to, kind of mitigate some of those costs. They're telling them, they're telling investors, we're going to control our costs. We're going to control what we can in this environment.
Yep.
Right. And and then they're, making some shifts to kind of supply chains. Right. One thing we're not hearing, and I think it's very, very important in terms of the macro environment, is we're not hearing companies announce big layoffs. Right. And I think that is very key as we move forward.
And so let's talk about that, because that does preview in some ways, Michael, the jobs report, the non-farm payrolls report that we'll get on Friday, which of course does cover the month of April. Expectations are 130,000 jobs were added last month, well below what was a much better than expected 228,000 jobs in March. So what's important here?
Yeah, so we've seen over the last year, we've seen the labor market moderating, right? We've seen a slowdown in hiring. I don't expect that to change, right? This morning within kind of the ADP survey, we saw a continued slowdown in travel and leisure, and we actually saw a decline in education and healthcare services. That has been a big driver of job gains over the last 2 years, right? So that gives you some sense that we could see kind of a weaker number, kind of as we move forward. But I think, kind of just going back to my point, we're seeing a slowdown in hiring as long as we're not seeing kind of the separations, right, and companies laying off kind of the workforce. I think we can kind of muddle through. If you look at yesterday's JOLTS jobs numbers, right, those separations numbers actually fell in the month, right? So that was kind of a positive read-through. We're kind of right around 1% of the total workforce, and that's below kind of an average since 2020 of 1.4, 1.5%, right? So we're still at very, very low levels of separations.
Okay, so tech earnings are also going to be starting to come in, including this evening, right?
Yes.
Microsoft and Meta to report, Apple and Amazon Thursday after the close. What do you anticipate we might hear from these technology chiefs?
Yeah, so I think the early numbers that we got, kind of from Google, or Alphabet, last week were pretty positive. I think there's going to be a continued focus on kind of what that AI spending looks like. Kind of the Supermicro numbers overnight kind of draw into some question. Raise some more red flags kind of on that front. But what we've heard from management teams over the last week, from Amazon, from Meta, right, they're kind of continuing to suggest that AI spending kind of is going to remain in place, right? So that so I would imagine some calming commentary from that perspective. The other thing to keep in mind from tech, on the tech side of things, is that the new DeepSeek model is expected to come out kind of any time this week. I saw some headlines that was coming out. That part of that was released last night. Alibaba released their kind of new model. So we're going to have to sort of see how kind of markets react to,
Yeah.
to those new models.
We've seen the semiconductors trending lower since the summer of last year, certainly preceding some of the other weakness in the market. Michael, I wish we had more time. We do need to leave it there, but thank
No
you
problem.
as always for joining. It's great to get your
My
take.
pleasure. You know where I am.
All right, great. Michael Reinking is the Senior Market Strategist here at the Stock Exchange.